The framing. You can get it going. We are not mining on that machine right now because we are not. It looks all crazy with the white back there though, don't it? Get me some coffee. Look, these late mornings, I guess they're just going to happen. Summer's wild, guys. Summer's wild. Let's see what we got going on today. What's up, sons? It's Blind Rod with Son of Attack once again, and today, welcome to yet another crypto mining show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life, and we are going to be talking about some Bitcoin shorts, Ethereum shorts getting liquidated, a short squeeze on the top two cryptocurrencies. Kind of weird. We're going to be getting into it and seeing if that's actually what's happening. We're going to be talking about Samsung now hopping into the Bitcoin mining ASIC manufacturing scene, along with, of course, Intel. And Compass Mining lost a facility, apparently, allegedly failing to pay a power bill. We're going to be talking about that. And then the Aneta BTC Smart Pool, NVIDIA now cutting down their 5nm wafer orders for next gen 40 series because they don't think they're going to sell very many. And the SRB miner has launched. Lots of fun stuff today. Make sure you hit the like, comment, subscribe. And we will get into, of course, questions and answers at the end of the show. I see one. Thanks for the interest in my personal health and well-being. We'll talk about it at the end of the show. It's actually looking pretty good, though. So let's get into it after a word from today's sponsor. And then we'll get rolling. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Welcome back. So first things first, we like to cover the recent miner releases for the day, but we actually missed one yesterday, so I wanted to bring it up today. It's the SRB miner, multi-miner. Let me see if I can get the latest release notes up for you guys. There we go. This is going to be version 0.9.8. And they added a couple really awesome things that I was looking forward to. So I want to check this out. I haven't got it working yet. I've been extremely busy. But they added Ethereum and ETC hash plus Caspa dual mining mode. And so look for a guide on this channel as soon as I can get that up and running for you guys. They also added Ergo plus Caspa dual mining mode. Two really, really awesome options in my humble opinion. Obviously, with Toncoin going away, you know, we don't have as many dual mining options, or didn't. You did have, of course, still Alephium, but now with ALF, we also have Caspa. And if you guys don't know, I was spec mining Caspa. I run a node for Caspa. I like the project from, you know, a technical perspective. I think they could do some work, obviously, on the, I guess, PR front, right? But other than that, obviously, I am excited about it because I keep saying obviously, and I just want to do it. And it's not like they just did dual mode for Ethereum. They did dual mode for, of course, Autolycos, which is Ergo, and that's super awesome. A few other things, the performance increase on curve hash algorithm for CPU up to 40%, and my understanding is it is working. Like if you are looking for a boost in your CPU mining, you want to be picking this up because you got a 40% boost in hash rate on Curve Hash. They added the parameter GPU dual mode, which must be used to enable the new dual mining mode. They upgraded command line parser and some bug fixes. They say to maximize your mining profits, SRB Miner added real dual mining of Ethereum and Caspa and Ergo and Caspa. This feature is still in experimental beta phase, so feedback is welcome. They say setup procedure for the new dual mining mode is exactly the same as before. You just need to add the parameter GPU dual mode to enable the new mode. You can manually set the intensities for both algorithms if you wish. It can have a positive, negative impact on the hash rates. An auto-tuning mode for the new dual mining is planned to be added in the future. Currently using the GPU auto-tune parameter won't do anything. The dual Ethereum Caspa example is here. Basically, you can just copy this and put it into your batch file. We're going to be looking at, obviously, Hive OS for this as well. And then they also have the example for Ergo and Caspa. So you can just copy this, put it into, of course, your batch file and modify it as needed with, of course, replacing the pool you prefer, as well as the wallet addresses, etc. They upgrade the command line parser. Order of parameters doesn't matter anymore. Parser will internally fix ordering. Also, there is a new way of defining multiple algorithms. Parameters will be merged. So an example is algorithm ET hash Caspa can be written as algorithm ET hash or algorithm Caspa. Rule is that first defined parameter will be defined as algorithm 1. Same parameter, if used, will be defined for algorithm 2, etc. So the example is algorithm ET hash Caspa. GPU intensity can be written as algorithm ET hash, and then blah 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 goes on. And then they have an example for Ethereum and Caspa can be written as example. So that's for the parser. And as it sits right now, I definitely think that checking out dual mining Caspa as opposed to ALF may be beneficial, because just from the perspective of getting into something that's a little bit different, a little bit more speculative, right? It's not speculative fully anymore. It is listed onto an exchange, so you're not speculating on price, to be clear. You do have basically a price that is set, but future price you could speculate on. Sure, we could go ahead and say that route is valid. But you're able to go ahead and stack a different coin as opposed to just ALF, which is cool. So I'm excited for that one. Let me know what you guys think in the comment section, as well as in the live chat. So today also we have NVIDIA basically talking about cutting down their wafer orders. And that is because they expect low demand for the RTX 40 series due to the crypto flood resulting in lower demand, alleges report. This is coming from WCCF Tech. Based on a report from Digitimes, it looks like the recent decline in PC demand may affect NVIDIA's upcoming GeForce RTX 40 graphics card lineup, as GPU demand has hit a new low and is expected to get worse in the coming months. The report states that NVIDIA has cut down its orders of TSMC 5nm wafers, which are expected to power their next-gen GPU lineup. The report mentions that the PC and electronics market has slowed down rapidly, and Apple is also one of the big three customers of TSMC who wants to revise their wafer order given the current scenario. But for NVIDIA, the slowing PC market is not even the biggest concern. It's the recent GPU flood. Meanwhile, while AMD has cut down its 7nm and 6nm orders, which power its current CPU and GPU lineup, they haven't revised their 5nm wafers orders, which means that the company remains optimistic about its Zen 4 and RDNA 3 product lineup coming later this year. There's always more to the story, right? And one of the things that's kind of interesting here is that during the crypto boom and during the shortages and the lockdowns and all of that, you basically had AMD in a position where they weren't actually able to manufacture and ship enough GPUs, while NVIDIA, on the other hand, had multiple foundries and had a ton of GPUs available to ship. This ended up being a kind of odd position where, For a while, the AMD GPUs were just a paper launch. Like, sure, we could say that it was just a paper launch for the 30 series, but those were hitting Best Buy store shelves semi-frequently, right? They were hard to get. You had to wait in line for them, or you had to go get in line at Micro Center, etc., but you could pick them up. While for the longest time early on in this last cycle, you just didn't see any AMD GPUs. It was like basically they were non-existent after the 6900 and 6800 XT launch. You didn't see anything on the shelves. And if you did, they were so overpriced that it really wasn't worth it. Now I'm having some kiddos in the background go crazy. They're playing, so I apologize for that, but it is what it is. It's summer. Welcome to the summer. So it is what it's going to be. I apologize if it's distracting. So, in addition to this though, NVIDIA has paid a huge amount of prepayment. Oh, no, I want to continue on that thought. I'm getting distracted here by the noise. I'm the one getting distracted. All right. So what I wanted to take, or where I wanted to essentially take that to, was going to be the fact that now it seems like from a supply standpoint with AMD and NVIDIA, that AMD is going to be able to basically meet NVIDIA with the same amount of supply. So while they don't have access to as many resources as NVIDIA, just like they have it in the past, now they probably have basically the same amount still, right? So that's why they're probably not going to be cutting down. The other interesting point about that is if we look at like power to performance numbers, the RX 7000 series coming from AMD is looking much stronger this time around, even stronger than the 6000 series looked like than the competitor, the RTX 40 series. So I think that AMD feels very, very confident, and just reading this line alone makes me consider the fact that AMD is probably extremely confident in their product that they're about to launch. And that makes me extremely excited because I want competition in the GPU market from a gaming perspective, from a rendering perspective, from a mining perspective, all of it, right? And we're also getting a big bus at the top end. So we're going to be able to see AMD actually swing really significant blows at that top end market this time around. In addition, NVIDIA has paid a huge amount of prepayment to obtain more process capacity below 5 nanometers since Samsung's 8 nanometer return to TSMC. However, the decline of the mining boom came quickly. All right. And the terminal channel and graphics card manufacturers were full of stock. The large number of secondhand cards released on the market and the less than expected demand for gaming PCs forced NVIDIA to adjust its plans and indicated to TSMC that it would delay and reduce the first wave of orders. In addition, although AMD has reduced orders for the 7 and 6 nanometer by about 20,000 pieces, its 5 nanometer PC and server orders have not been revised, and they are willing to accept price increases. Therefore, TSMC has little response to this, and that's extremely interesting. As reported a few weeks back, the crypto crash has resulted in a huge flood of used graphics cards entering the reseller and used marketplace. These cards are available for much cheaper than their retailer listed prices, and most gamers who were waiting for a new solution for their PCs are going to buy these GPUs even though we advise them not to. Not only is there an existing flood, but the NVIDIA GPU inventory that is comprised of current gen Ampere graphics cards is vast. Yeah, people in this economy aren't going to be like, oh, WCCF Tech had an opinion piece that said that we shouldn't buy GPUs and from used markets and then not do that. Like, money's tight. If you're able to pick up, a cheap 30 series GPU, people are going to do that, especially over a 40 series right now too. Because if you're looking at the 40 series, like we've talked about before, you're looking at upgrading to ATX 3.0. So you're going to have to upgrade your power supply as well. And that's not an insignificant amount of money, because as we look at these new ATX 3.0 standard power supplies, there's really not much under 1,000 watts, which means you end up in a position where you are over 1,000 watts. And that pricing, of course, in accordance goes way up for those power supplies as well. NVIDIA wants to cut orders, but TSMC is unwilling to make concessions. This is interesting. At present, the adoption of the 5nm next generation RTX 40 series can delay the purchase of goods for one season, or even to the first quarter of 2023. But NVIDIA is responsible for finding other vacated production capacity. Customers take over to make up, minimizing the impact. Furthermore, the report states that NVIDIA already paid TSMC to secure a vast supply of 5nm wafers early on. We had multiple reports on how NVIDIA spent billions of dollars to acquire 5nm wafers from TSMC last year, but that might not have gone as NVIDIA planned, as TSMC is not willing to make concessions to the green team, and the best they can do is hold back the supply for at least one quarter, which is likely why we're hearing reports of delay for the NVIDIA RTX 40 series lineup. The possibility remains that the launch may be moved to Q1 of 2023. NVIDIA will also be responsible for finding replacement customers for vacated production capacity. So, what have we learned? Obviously, we've learned that we are probably going to have an even larger flood of GPUs. NVIDIA can really only delay one quarter, which we're looking at sometime in 2023 for the RTX 40 series to start flooding the market. Hopefully what that does, just to give you guys an idea, is NVIDIA probably wants to reduce the supply initially so they can keep the higher MSRP prices. When they have a huge flood of it coming in 2023, we'll probably see a reduction in lots of sales, especially from third-party board manufacturers come out on like Newegg, Amazon, Best Buy, etc. And the prices will have to come down, especially considering the fact that everything is flooded. So I think from the perspective of purchasing a brand new Ada Lovelace GPU, a 40 series, the best bang for your buck is going to be in that second set of shipment that they're forced to make, that's going to increase the supply so significantly that they can't keep the prices at where they're supposed to be. In addition to that, of course, it's going to probably drive down the RTX 30 series, which is going to be extremely enticing from a mining perspective because, like we've talked about before, as far as memory performance goes, you are getting the same memory performance at the top end for the 40 series as you are on the 30 series, except with the 30 series, you're getting lower power requirements and lower, basically, power supply requirements, standard requirements, right? You don't have to upgrade to that ATX 3.0. Either way, obviously, this is causing a lot of issues, in the market, but it's good for the consumer to a certain extent because it forces those prices down, and I'm excited for it. I'm also excited for the RX 7000 series because it really does spell out to me that we are going to see extreme competition at the top end of that market. So last night we went ahead and reported on the Aneta BTC Smart Pool because it is running out. And that's okay because they're going to go ahead and continue it. This was a blog post on GetBlock, and they did do a shout out to me. So that was awesome. If you want to get the full read through, make sure you check out my video on it. But suffice to say, phase 2 is coming, and it will follow the emission of the initial 10 million NETA, which has like less than $1 million left in it right now. And the phase will extend emission by an additional 5 million NETA with a reduced bonus reward of 15% from the 22%. So that makes your ERG equivalent reward 115% in NETA. I just want to make sure you guys are aware of that. The other thing that's cool is that phase 3 that they're working on is going to incorporate increased rewards for miners holding NETA Angels. And I find that extremely interesting. I did mint one. We minted one live on this show. So I'll be able to test and see if the rewards go up based on my ownership of basically a NETA Angel NFT. This would be the first time I've seen an NFT integration with cryptocurrency mining. With NETA itself, that's the first time I've ever seen a DeFi integration with cryptocurrency mining, which was already, in my opinion, my humble opinion, revolutionary for proof of work. And now we're going to see NFT integration into, of course, mining. And that will be, I think, revolutionary as well. So if you're really looking at like who's making waves right now within cryptocurrency mining, especially as it pertains to GPU mining, it's Ergo. It's Ergo Dex, it's Aneta. these are the things that we should be paying attention to and putting our support behind, because they are supporting us, right? These are awesome technologies that are being integrated. It provides, in my opinion, just a lot of versatility within your mining opportunity. And I really am getting more and more bullish on Ergo as a project, because think about this too. That initial kind of pump from like Ethereum DeFi and Ethereum NFTs really came from miners looking for stuff to do with their Ethereum. Ergo's attacking that right off the bat. So they're already going to have an ecosystem surrounding the NFTs, and people are going to come in and say, why are these NFTs worth more? Well, if you have a Neta Angel, right, that's, I minted for $22, it seemed extremely expensive. But if I'm getting 20% bonus rewards because I own a Neta Angel on my mining pool, that drives the price of that way up, right? It's almost like an additional revenue investment, which is just crazy and cool, I think. And so when people start coming in, just like they do with the halving of Bitcoin, right? The halving of Bitcoin happens, it causes the price to go up. The general public sees that, they buy into that, and then it blows up. Same thing if we're talking about the Ergo ecosystem. People see that initial bump of Ergo, it's happening because of the miners, because the miners are incentivized to participate in the network. They go over there, then they look at the DEX and they're like, whoa, there's already, $250,000 in liquidity on a DEX that launched less than a year ago. What is going on here, right? Let's go ahead and check it out. And they hop in and they start playing with it. They see the price start to tick up. The general public starts purchasing. Then they move over to the NFT space and they're like, what's going on with these angels? Why are these NFTs expensive? Well, the miners are driving the price of that up. And then you get the euphoria from the general public coming in and purchasing those off of there. It's a snowball effect. And I think that from, all this happening in the bear market just spells out really, really good news for Ergo coming up. And with Ergo being so young at this point, it's really impressive what they've managed to do. And it's extremely impressive what GetBlock's been able to do as well with all of these different integrations. So definitely I am bullish on Ergo and the entire ecosystem right now as it currently sits. Not so bullish on Compass Mining or mining hosting, because I've been basically hearing about miner hosting getting shut down everywhere. ProDirect is done, which we did the interview with them. They aren't hosting anymore. And now Compass Mining has lost a facility, allegedly failing to pay a power bill. And this actually happened basically, I think overnight, yesterday. And here we go. The facility owner, Dynamics Mining, publicly took to Twitter to share the letter terminating its hosting agreement with Compass Mining, saying it had unpaid bills. Bitcoin mining hardware and hosting company Compass Mining has lost one of its main-based hosting facilities after the owner, Dynamics Mining, terminated the hosting agreement between the two, claiming Compass failed to pay the required bills. Late on Sunday, Dynamics tweeted a letter on Twitter it sent to Compass Mining, which stated, as of June 14th, the hosting contract between the two was terminated. Dynamics alleged Compass has 6 late payments and 3 non-payments related to utility bills and hosting fees. Man, as I look at my utility bill and the revenue, it always gets scarier and scarier, and I'm scared of being in this type of position too. Luckily, I'm making my payments, but I got to make my rent payment today, and I'm like, I have to go liquidate Ergo, which I don't want to do, and that's like the position I'm in. So I feel it. I feel the pain here from a mining perspective, but at the same time, it's like, this is a much larger company. What happens to the people that have been having their mining rigs hosted by Compass Mining? Are they going to be, making up for this in some way as it gets shut down? Now, obviously, this being on Twitter is kind of in bad taste from Dynamics, but at the same time, depending on how many times they have been trying to gather payment from Compass, it may make sense, because here's the thing. Compass Mining has a very, very large, they need their PR, right? They need that public facing, like, hey guys, we're a good company, we're stand up, you can trust us with your mining rigs, blah, blah, blah. And if you are stuck in a position with a company like that you're trying to get payment from, maybe making it public is the best way to do it so that they, will pony up so that they don't get this bad PR. It's a little too late for that now, though, obviously, because the bad PR is out there. In a follow-up tweet a few hours later on Monday, Dynamics alleged the power consumption bills totaled $1.2 million and Compass had only paid around $665,000. It said Compass claims to have given the money required for the bills, but Dynamics alleged it was used to build other facilities instead. The very public situation caused Compass Mining CEO Whit Gibbs to tweet it would fight this battle in court, not on Twitter. The tweet has since been deleted. And that is interesting because Dynamics Mining is leaving their tweets up and Whit Gibbs is deleting their tweets. Obviously, probably if he is talking to legal, then maybe they were like, hey, get rid of that tweet right now. But the individual behind Dynamics account hit back at Gibbs saying that all Compass had to do was pay $250K for 3 months of power consumption and that Twitter is the voice of your customer base, not the courtroom. And that is just what I was referencing earlier. So I'm glad they brought up that point. The reason Dynamics is hitting Twitter is because they want the customer base to be aware of the situation to get basically Compass Mining to resolve this issue as far as non-payment. A spokesperson for Compass said to Cointelegraph, there we go, that the statements from Dynamics Mining are absolutely incorrect and it would be issuing a statement shortly. On June 28th, Compass announced Gibbs and Chief Financial Officer Jody Fisher had resigned effectively immediately, adding Compass Mining was created to make mining easy and accessible. We recognize that there have been multiple setbacks and disappointments that have detracted from the objective. Through this restructuring, the company is wholly focused on regaining goodwill for our stakeholders in the community. And we talked about this, obviously, on the 28th. Chief Technology Officer Paul Gosker and Chief Mining Officer Thomas Heller were appointed as interim co-presidents and CEOs. Compass added it will begin a search for a permanent CEO and CFO immediately. It is unclear if Gibbs and Fisher's resignations are a direct result of the situation with Dynamics Mining. Cointelegraph contacted Dynamics Mining for comment but did not receive a response by publication time. Compass Mining sells application-specific integrated circuit miners, specialized cryptocurrency mining devices, which come with an option to be hosted in its facilities located across the United States and Canada. It is unknown what will happen to the customer miners located at the facility. And that's really the crux of the issue as a miner because man, finding hosting is extremely difficult. We talked a little bit about this yesterday where there are more miners coming into the US than there is facilities available to host them. So facilities that are already up and running that give you an option to host make a lot of sense because if you're trying to build up enough power to go ahead and get them in, it's going to take a long time because basically everybody's backed up. There's work shortages everywhere as far as getting anything done. There's supply shortages, so power companies for install are taking a long time. So I get the appeal. There's high power costs rising, so finding a hosting facility that's cheaper than the actual price that you would pay for your power makes sense from that perspective. But on the flip side, you don't control your hardware, right? If you don't control the hardware, not what would we say? Not your power, not your miner. There we go. Not your power, not your miner. That's the new coin phrase we're going to use. And it pertains here in a very specific way because if somebody else is powering your miner, you're completely reliant on them to keep it up and running. And in a situation where they miss power bills or something like that, in this case, potentially, right, allegedly from Dynamics Mining, regardless, though, that mining facility gets shut down and now you have a miner that's not running. Are you still paying the bill for that miner? Have you already paid up front? How far out now is your ROI? How many days are down? Will they compensate you? All these questions come into play. But that's kind of where I'm going to end it with my coin phrase, not your power, not your miner. Compass states that in the event of an emergency, it may rearrange, remove, or relocate customer hardware without any liability to Compass, according to its hosting agreement. And that's good if they have enough room in other facilities, right? You still have the downtime for them to ship it from this facility that's no longer functioning to a new facility. And then like we talked about yesterday, it looks like we're running out of power to host all of these miners just in general with a huge influx of them coming in. So will there actually be enough room in another facility, right? And then how long would it take for them to spin up another facility? The terms also see customers waive their rights to seek remedies in court. And that is incredibly concerning. Just to be clear, if you read that, like, I didn't dig into Compass Mining because I wasn't going to dig into the hosting thing after kind of like seeing like the struggles that ProDirect had and so on. Compass had reached out to me. I kind of wish I would have read into these terms. I was not aware that their terms say that you waive the rights to seek remedies in court. I don't know if that actually holds up in court, but that would be a very concerning term and condition to me. Or be involved in any class action lawsuits, and any proceedings must be brought forward by each individual customer if they were to file a lawsuit against Compass. The situation comes when many cryptocurrency miners face a challenging market environment with the continuing price slide of Bitcoin and increasing energy costs. In mid-June, when Bitcoin fell below $24,000, the profitability of many of the older ASIC miners dropped into the negative zone. And even some of the newer generation mining rigs are near or past their shutdown thresholds based on the price of the asset. Around the same time, with Bitcoin mining profitability dropping over 75% from the market top, the volume of Bitcoin sent by miners to crypto exchanges reached a 7-month high on June 15th. Several public Bitcoin mining firms sold 100% of their Bitcoin production in May, according to reports. And I do want to say, like, some of the mistakes I've made, like I've talked about before, I knew the halving cycle. I'm not stupid. I just got tied up in the whole, like, oh, it's going to go up for a couple more months. I should have moved into a cash position early on. Luckily, I don't have debt to pay off or anything like that as far as like for miners. I do have operating costs, which we will be covering the balance sheet tomorrow, and it's going to look extremely disappointing, and I'll talk to you guys about that. But these larger companies, I'm surprised they wouldn't have been a lot more safer in these positions, and now they're in a position where they're selling 100% of their mined Bitcoin to stay afloat. Luckily, they can still do that. We'll have to see if that continues. Samsung, though, is bullish, and they're going to produce Bitcoin mining chips, and they secure a Chinese ASIC firm as its first customer. South Korean electronics giant Samsung is reportedly working on 3 nanometer chips that can be utilized in Bitcoin mining after the company hinted about the product during the 2022 Q1 financial call. The 3 nanometer chips are compatible with specific integrated circuits, machines known to be effective in mining Bitcoin, with sources indicating trials are already underway, the ELEC reported on June 29th. Samsung's ability to manufacture 3 nanometer chips will likely solve some Bitcoin mining pain points, like reducing power consumption by up to 30%. Additionally, the chips can increase the mining speed by about 15% alongside a 33% higher translator density. The company has already secured its first customer, Pan Semi, a Chinese ASIC firm. Sources further indicate that US-based Qualcomm has also made reservations for the chips. Qualcomm, Samsung's largest customer, had placed orders for 4 nanometer chips, but it was canceled due to lack of production by the South Korean company. The companies have also reportedly agreed that Samsung would make its 3 nanometer manufacturing process available to Qualcomm anytime needed. Samsung's 3 nanometer venture is based on the company's gate-all-round technology, which is different to the conventional FinFET process used to create 7 nanometer and 5 nanometer chips. Overall, GAA-FET decreases the silicon size, leading to better performance. The chip trial will likely give room for mass production. Notably, the possible introduction of the 3nm chip would bolster Bitcoin's ASIC industry and the overall SHA-256 hash rate. The hash rate on Bitcoin's network has been rising in recent months. Not really, it's been going down now, despite the significant cryptocurrency market price correction. As reported by Finbold, the hash rate stabilized in June around 215 exahash a second after hitting a record high of 220 exahash a second in May. It really went up to like 234, and then it came back down to around 220, just to keep you guys up to date right now as we speak. With Samsung's entry into Bitcoin mining, the space is recording significant competition with leading tech against rolling out innovative products. For instance, Intel announced the launch of a new cryptocurrency mining chip dubbed Blockscale. According to the company, the chip promises more energy efficiency at SHA-256 hashing. So what does this spell out as you guys start kind of navigating? Because people were asking me about buying Bitcoin mining chips during the bear market, buying these ASICs specifically for Bitcoin. And I think you want to be extremely careful. You got huge players coming in with huge potential for reduction in power consumption and increase in hash rate, right? 30% increase is just based off of the manufacturing technology for Samsung. And if those line up with a bull run cycle, you end up in a position where if you're buying older units, they're going to get priced out by the large units when you actually have the next bull run. So you want to be buying these at extremely low prices if you are buying them. And as far as S9s, in my humble opinion, S9s are done. Don't touch them with the 10-foot pole. They are going to be paperweights at this point. And this is the problem with ASIC mining in general, right? Is we end up in a position where you are stuck on a single coin and some new technology comes out that's extremely better than the previous generation. Now that happens to a certain extent with GPUs too, except when we look at GPUs, because of the memory reliance, you're really only looking at it when it actually is influenced by the increase in memory performance for the most part. And we saw during this last bull run that the Polaris GPUs, which are extremely old, a decade old at this point, were still very competitive in the mining market. So you're able to shift and keep those alive. Those I think are going to finally start getting phased out here with the next bull run. So I wouldn't recommend buying Polaris GPUs right now, but I think your 6000 series, even your 5000 series from AMD are going to remain relevant. I think that your 20 series and your 30 series are going to remain very relevant a lot longer. I think S9s are out. If you're going to buy anything, S19s are what you're looking at as far as that's concerned. So Bitcoin and Ether futures rack up nearly $200 million in liquidations on short squeeze. What? A short squeeze on Ethereum and Bitcoin? What's going on here? This is interesting. Price volatility arose as signs of looming recessions were renewed among investors, one analyst said. Futures tracking Bitcoin and Ether racked up nearly $200 million in liquidations as volatility on Thursday saw prices break above and back below resistance levels. On Thursday, Bitcoin dipped under $20,000 amid a broader fall in Eurasian markets, recovered over that level, and then fell as low as $18,650 in U.S. evening hours. A short squeeze then saw Bitcoin touch over $20,900 in early Asian hours on Friday, which was then followed by a drop to $19,400 at writing time as traders took profits. Liquidation refers to when an exchange forcefully closes a trader's leverage position due to a partial or total loss of the trader's initial margin. It happens when a trader is unable to meet the margin requirements for a leveraged position. Thursday's downward move caused over $76 million in longs or bets on higher prices to get liquidation. This likely caused the short squeeze early on Friday. Similar trading in Ether futures saw the asset add more than $100 within hours as it jumped Thursday lows of $966 to Friday mornings of $1,115. Liquidations on Ether futures crossed over $100 million alone in the past 24 hours, CoinGlass data shows. Futures tracking other major cryptocurrencies such as Solana and Avalanche saw just over $5 million in liquidations each, implying their price action was mostly spot driven. The volatility arose earlier this week as traders assessed fresh comments from central bankers that signed relief from rate hikes may not occur in the coming months, as reported. Quote, fears rattling financial markets show little sign of subsiding, says Susanna Streeter, markets analyst at Hargreaves Lansdowne, in an email to CoinDesk. Investors are spooked about signs of looming recessions while inflation stays stubbornly high. Fresh falls on Wall Street marked a miserable milestone, with the S&P 500 tumbling in the first half of the year by 20.6%, a fall not seen since 1970, and creating a technical bear market. The tech-savvy NASDAQ, which has been racked by volatility, has plummeted by a third this year and is on track for the biggest ever yearly drop. Streeter said that there are concerns among investors about demand and inflation, and the Federal Reserve and other central banks will have to step on interest rate hikes to bring red-hot prices under control. So, I talked about this a few times because if we're talking about a traditional halving cycle, which I always find extremely interesting, we should be around the $20,000 to $22,000 mark for Bitcoin and the $1,100 mark for Ethereum, just based off halving cycle, right? During this bear market, and we sit there until 2025, right? That's pretty much what I'm expecting to see. And then we'll see a meteoric rise at that time. And it lines up kind of nicely with other things that are going to be happening in the economy as well. So when I see like a short squeeze here, I go, okay, well, what's actually happening? Is this an influence of Bitcoin, or is this an influence of something else, and so on? Let's talk about what it looks like, right? So yesterday and today, two big purchases happened with Bitcoin. Yesterday, Michael Saylor's MicroStrategy doubles down on Bitcoin bet with new $10 million purchase. Bitcoin, the largest cryptocurrency by market value, might be down 70% from its all-time high, but MicroStrategy and its CEO, Michael Saylor, remain bullish. On Wednesday, MicroStrategy disclosed that it had purchased 480 Bitcoins for about $10 million from May 3rd to June 28th. MicroStrategy now holds an aggregate of approximately 129,699 Bitcoins, which were acquired for about $3.98 billion, the company said. Saylor tweeted the news as well with his laser-eyed Twitter profile picture intact. The Bitcoin whale has long supported the cryptocurrency even during the latest market downturn. When Bitcoin fell below $20,000 in June, reports circulated that MicroStrategy might face margin calls on its Bitcoin-backed Silvergate loan. Saylor dismissed those reports and promised to buy more Bitcoin in mid-June, even as MicroStrategy's Bitcoin holdings were as much as $1 billion underwater. Over the month, Saylor has continued to tweet in favor of Bitcoin as well. On Monday, he tweeted, "Bitcoin is the only investment-grade cryptocurrency," and Tuesday he wrote, "Stay humble, stack sats," referring to Satoshis, which are the smallest fraction shares of a Bitcoin. So we have this purchase going through, right? Kind of lining up with this short squeeze that happened. And then we have another one. El Salvador purchases 80 additional Bitcoin at $19,000, President Bukele says. The last purchase by the Central American country had been in May. El Salvador purchased 80 Bitcoins at $19,000 each on Thursday. "Bitcoin is the future. Thank you for selling cheap," he tweeted, and accompanied the text with screenshots of 40 purchases made on Thursday, which totaled $1.52 million. El Salvador's last Bitcoin purchase was in May, according to Bukele, when the Central American country acquired 500 coins for a total of $15.3 million at a price of $30,744 each. According to CoinDesk data, based on his announcements, El Salvador is 55.03% down on its Bitcoin bet. From September to date, the country has acquired 2,301 coins for a total of $103.9 million, but its portfolio is currently worth $46.6 million. In May, El Salvador Finance Minister Alejandro Zelaya said that the Bitcoin amount the country had at the time represented less than 0.5% of its annual budget, adding that the Bitcoin losses posed extremely minimal risk to the country's fiscal position. So we had two large purchases happen during this short squeeze by whales. And so, you end up in a position just going like, okay, well, obviously that's the influence of it, not necessarily the market. And I kind of wanted to see, you know, is this like what's actually happening here? Are we recovering? Are we staying at these resistance levels? Do we go lower? Do we stay? I can't really tell you. Obviously, none of it's financial advice. My feeling is that even if we go lower, we come back to this point and we stick right around these resistance levels until 2025. That's how I see it. I think it's going to be maybe a shortened one, maybe a shortened cycle to where it happens in earlier in 2024, just because the halving will happen then, and then it may spark off a little bit quicker because as more people are aware of Bitcoin, when they see that initial price pump, they may be like, oh, and more people catch on, right? But as far as this one in particular, really the case appears to be Michael Saylor and El Salvador large purchases along with other whales and so on, not necessarily, you know, miners or anything like that. So I'd love to show you guys my Ergo wallet, but we're going to run an ad first. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options including wire transfers to easily receive your profits. Crypto.com also offers additional services including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. And boom. So let's get into mining profitability for the day. The past 24 hours, not looking necessarily great. I was making some changes yesterday. We moved some to Ethereum and we left some on Ergo. Reasoning for this, I initially moved everything over to Ethereum. I have some rigs that are running hot. I took the rigs that are running hot and put them back on Ergo where they apparently have no issues, right? So a lot of this has to do with heat. Ergo is extremely good on heat. If I'm having issues with a particular rig, I put it on Ergo. I also went out to the farm. Every card that was bad, I took off and put on the table. I have a ton of work to do. I got some more thermal pads in today. We're going to be trying them. There are these. Let me get them real quick. So I found these critical thermal pads, which are on Amazon. I'll get you guys a link for them too here in just a second. But these have the highest thermal conductivity at 20 watt per MK, whatever. I need to learn the abbreviation for that. And this is the highest thermal conductivity I have seen, at least on Amazon. So I wanted to try this out. This is more than like the G lids, all that stuff. So we're going to be trying it out and probably look for a video on those coming out. I'm probably going to go out there and do some of that today. That being said, as far as Ergo, we have 4.42 gigahash online right now, obviously down from the 12 gigahash or 10, 11, 12 gigahash, between 10 and 12, depending on the time of day and how hot it is outside, blah, blah, blah. And that it resulted, I mean, past 24 hours also is a little difficult because we didn't do this change till later in the day. So we're at like 15,367 netta. That's going to equate to 2877. I don't know if we add the unconfirmed balance. If we do, then it's closer to like 19,000, which we could say. So that would be 3573. And then we moved everything else to Crazy Pool. I really like Crazy Pool primarily because when they do get blocks, they pay me out a lot more than everybody else. So that's where I'm on. I'm on Crazy Pool. Plus you get the option of hitting the jackpot, which is kind of nice. The last 24-hour rewards was 46.64, but that's not a full 24 hours. So we're going to have to give it a little time. We did 0.04 for ETH and 24 hours on 3 gigahash, right? So if we equivalated that out over here on what to mine just for fun, let's calculate that out. This says 48.29, not even a full 24 hours, and we're only like $1 off of what to mine is saying. So I think we're actually even doing better, just to be frank, as far as that's concerned. We have an unpaid balance of 0.002. We'll ride it out, see how it goes. We'll be tracking it, obviously. If you guys are worried about reported versus hash rate, by the way, too, on this particular pool, it really depends on the miner you're using. So for whatever reason, let's see if you can see the reported here. NB miner doesn't report the hash rate properly to the pool. So that's why that happens. We have some high stale shares on a couple of these we're going to have to take a look at, but other than that, not bad. Let's take a look at what to mine. Calculated out for RTX 3090 with corrected ZIL hash at 110, Kapow at 60, ProgPow at 60, and Firo proof of work at 60. It does look like the APIs are starting to update because profitability is looking better on Ethereum at $1.92 a day in revenue and $1.15 a day after power. Ravencoin at $1.81 in revenue and $1.02 after power. Cero $1.72 in revenue and 93 cents a day after power. Xano at $1.64 a day in revenue and 85 cents a day after power. Conflex $1.58 a day in revenue and 79 cents a day after power. And then NiceHash ZIL hash is $1.50 a day in revenue and 81 cents a day after power. If you mine Flux directly, it's not as good at $1.30 a day in revenue and 60 cents a day after power. If you look at Firo, $1.38 a day in revenue and 64 cents a day after power. And Ethereum Classic, $1.35 a day in revenue and 58 cents a day after power. Ergo's way down here at $1.22 a day in revenue and 59 cents a day after power. My farm's pretty much split 50-50. No, there's more on ETH. We're definitely more on ETH. Definitely more on ETH. But if we did like 16,000, right, that's $30 a day on 4, which would be 2 gigahash. I think with Neta, we're still making more than we would on ETH so far. That appears to be the case, because if we did, that would be equivalent to about 2,000 megahash or 2 gigahash on ETH. We're about dead even. So Ergo with Neta right now is about dead even with Ethereum as far as profitability, but according to calculators that, aren't necessarily always accurate. Let's take a look at hash rate on Bitcoin. We're looking at 222 exahash a second, no real changes. Let's take a look at Ethereum. Ethereum is at 941 terahash a second. Let's go ahead and double check that with 2 miners though. This is showing 837 terahash a second on the network. Probably have some pools and nodes still kind of working, but about where I expected it to recover to, like we talked about yesterday. I think I hit that nail on the head as all of these start to recover. So we had about 25% of the nodes fail to upgrade or not upgrade at all, and they're starting to be upgraded. And the hash rate's coming back onto the network. Ethereum at 23.39 terahash a second. Ravencoin is at 2.82 terahash a second. Flux is at 1.16 mega solutions a second. That's actually a big drop off. Yesterday it was at like 1.3. I think we were all the way up to almost 1.4 yesterday for a bit. Yeah, we were. So a lot of hash rate dropping off of Flux right now. That's kind of interesting. We may want to look into that later in the day. And Ergo initially had a drop. I think we talked about it yesterday, down to like 12 terahash a second. Looks like it's starting to recover back up, 13.89. I think maybe some people like me went to Ethereum and then were like, yo, this shit hot. I'm going back to Ergo. Because that's exactly what I did. I was like, yo, this shit hot. I'm going back to Ergo, bro. And if we look at profitability, it's not that far off if you're utilizing Neta right now. Now, that's going to change when this million runs out and we go down to 15%. So we'll have to just track that and see. But, yeah, I mean, less heat, same profitability, less power. Thanks to the less power, obviously, seems beneficial. So, yeah, there you go. Mining pool profitability for the past 90 days. Crazy pool in first, Ether mine in second, F2 pool in third. For the last 60 days, ZET in first, Ether mine in second, Crazy pool in third. For the last 30 days, ZET in first, Crazy pool in second, Ether mine in third. For the last 21 days, ZET in first, Crazy pool in second, Ether mine in third. For the last 14 days, ZET in first, Crazy pool in second, Ether mine in third. For the last 7 days, Crazy pool in first, ZET in second, Mining pool hub in third. For the last 3 days, ZET in first, Crazy pool in second, Mining pool hub in third. And for the last day, Crazy pool in first, Flex pool in second, and Mining pool hub in third. Yes, I made the proper call. I always feel good when I make that proper call. Yesterday, I was like, I'm going with Crazy pool. I think they're going to do the best. And we made it. We did it. We had the most profit for the day out of the pools. Woohoo! All right, so ASIC miners, though. Let's go ahead and take a look at them. And we got L7 basically still in first, other than the FPGA here, at 1939 a day. The KD6 has fallen to 1654 a day. The KD5 has fallen to $10 a day. Handshake miner has actually surpassed it, the HS3, and that is pretty awesome. If we scroll down to the S19 Pro, it's at $298 a day. Now, I did need to look at something real quick for you guys and get clarification on something with HiveOS. I don't want to do farm. Let's see, where's their blog? Because a viewer brought this to my attention, and I think he was saying that it looks like the power consumption is actually higher. So I wanted to get this correct. Where's their... When comparing the power consumption of the same model, the stock firmware consumes 3,050 watts, while the Hive-On one consumes around 2,790 only. Comparing the power consumption of the same model, hash rate is 104, while the Pro Hive-On ASIC firmware is 138. To me, this sounds like 138 terahash at 2,790 watts. Let me know what you guys think it sounds like. I need somebody to test this too and let me know. Because I was being told that they are saying this 104, it's 104, or it's 2,790 watts at 104 terahash. If you overclock it, it goes above that. But I don't have confirmation on that here. Maybe I'm just like missing some information. So if you guys can help me out in the chat, I just don't have any of these models to test. So if you do have a model to test, let me know what you guys find as far as all that goes. Now, there's also a 4th of July sale. We talked about it in last night's video, but BT miners, use the affiliate link down in the description if you don't mind, if you are going to purchase something. Not all the deals are released right now. It starts tomorrow. So stop in and see what these deals are going to be. Make sure you just go ahead and pin that affiliate link so you're ready to go check it out for any good sales. We're starting to see some sales. You know, we talked about some yesterday. The V1 Mini dropping down to $790. The S19 Pro dropping down to $4650. You have the S19J Pro dropping down to $4,200. The S19J Pro 100 terahash down to $3,900. So lots of drops in prices. Not so much on the Silicon A10 yet. I don't know that I'd want, I don't know, I'd have to calculate that out. 720 mega hash a second for 4,500. Not too terrible, I guess. What other sales have they got going on here? These are ranked by popularity. A lot of people are buying that S19 Pro. Ethereum Classic miners, nothing there. Litecoin, Dogecoin miners, the LT5 at 2,800. What's the L7 at? 12,000, 12,500. I'm looking for sale on this, man. That's what I want to see. KD box down to 12,200, but the gold shell KD box down to 1,400. The KDA down to 1,000. There you go. Prices are dropping. We should be seeing good sale prices tomorrow. So definitely check that out. There is a question. Thanks for bringing that up. ETH stats. Let's see what the average block times are looking like with well, that's not going to help. It's not, ETH stats isn't working. It's like average block time, 18 minutes. That's not correct. Let's see if it'll pull it properly. Where else can we get this at? I think we can get it on. Yeah, so we can get it here. Starting to go down to 15 seconds as of yesterday. Almost below 15 seconds now. Twisted, thanks for the $20 super sticker boosting that algorithm. All right, boys. Super chats are always appreciated, never required, first to read because they're the easiest to read. That's just the way the cookie crumbles. Tagging @SonOfATech makes the message orange, and then I will answer those. If you do not tag @SonOfATech, it's hard for me to see, so I can't guarantee that I'll answer the question. Raja Patel, $2 super chat, says thank you for the information. You're a good man. You're a good man. Thanks for the $2 super chat. Paul with the $3 super sticker. Thank you for boosting that algorithm. All right. 7 Hugh says @SonOfATech RX580 is underwater at this point. Well, why don't we look at the 580 real quick? I mean, I'm not, like I said, I don't suggest buying one. I think that it's a no-go, but I think that it's still profitable. Only on Ethereum by 18 cents at 10 cents a kilowatt hour. But, you know, if we go with like anything above that, 13 cents, when does it become unprofitable? 16 cents? Yeah, 16 cents, it becomes not profitable, which frankly is a lot of residential at this time. So, yeah, there you go. Xcraft with a $5 super chat. Thank you, sir. Says @SonOfATech, is the block that Bitcoin halves on set in code, or can they adjust it? It's set in code. Also, can the difficulty be adjusted, or is that automatic? That's automatic based on the amount of hash rate on the network. Thanks for the 99-cent super chat sticker, Panzer. And I prefer Pi. Thanks for the 99-cent super chat sticker boosting that algorithm. Queen of Random says, @SonOfATech, question regarding staking. If using Kepler wallet, I don't know that wallet, linked to a hardware wallet to stake Cosmos, I don't know about Cosmos. Are you still owning the keys? Yes, you are still owning the keys. To confirm transactions still need to be confirmed on the hardware wallet. Yes, you would still, like if you have control of your keys at any given time and you're just locking them up, then you technically still control it because you can unlock it any time with your keys. Nick G says, @SonOfATech, would you ever play Counter-Strike with any subscribers? Maybe not Counter-Strike, but I do community game nights on twitch.tv/blindrun, and we've been playing the Cycle Frontier lately. Happy Dictator says, @SonOfATech, some insider news, FPGA bitstream for Ergo. FPGA for Ergo, dang. Texas Ace says, @SonOfATech, I tried those critical pads on a 3080 Ti. Temps were great at first. Within a week, the temps were high. Then stock replaced them again, thinking I messed up, did the same thing. No clue. You know, what I found, just like obviously, and we'll let you guys know, is that in mining situations, for example, the GLID GC Extreme, they die out real quick. The Thermal Grizzly die out real quick. This is why I typically use the Amazon ones, because they don't dissipate the heat as well, but they last the longest, right? So there's a fine balance. The higher dissipation you have, sometimes, or at least in my experience, for the most part, has caused, you know, essentially a downturn in the longevity of them, especially in a mining situation. So we'll find out though. Pay Me in Crypto says, Ask Simon Tech, any thoughts on Ergo block reductions being implemented after Ergo Foundation got the 4.5% total in the first 2.5 years? Any thoughts on Ergo block reductions being implemented? Well, it's being put into a re-emissions contract that will be then paid out to miners, right? So the point of reducing the block reward was to basically extend the incentive for miners beyond 7 years to like 17 years now, because they didn't get as far as they would like to have gotten in like basically daily revenue. So there's a couple things surrounding that. There's storage fees, which are supposed to help keep miners afloat when the block reward goes away. But then there's also fees. But for both fees and network fees, right? But for network fees to be enough for miners to be incentivized to continue to provide security, there has to be a certain level of transactions on the network. So that's why you saw a re-emissions, because they want to extend that out further. That was basically the entire point of it. I did an entire video on the EIP. Hey, member for over a year, Panzer says, we always write about Ergo for the win. Colton says, we don't need a great hash rate migration because ETH did it for us. Yep, that is pretty much the point now. Detroit Iris says, Ask Simon Tech, when you provide liquidity on Ergo DEX, if the rate is 5%, do you get 5% on the token or the token and the paired ERG? The token and the paired ERG, I should be clear on that. I'm not exactly clear on that. And keep in mind that that is a changing rate. Tomorrow the ERG reward reduced by 3. Oh, because we're hitting the block. Yeah. So I was talking about the emissions contract. You're talking about the built-in block reward reduction, which is built into every proof of work mining coin. Dragon Audio says, Ask Simon Tech, really enjoyed drinking my morning coffee with you. Keep it up. Cheers, good sir. Alvastar says ETH is dying. Well, it is what it is. It's not really dying. Everything is right where I would expect it to be right now, if I'm being honest. Retro Mike says, as Son of Attack, you get the rate on selling on the selling token. Yeah, but it depends. It depends on which ones, because you can swap back and forth. Turns out ETH is the ETH killer. True story, man. How long were you live for? About an hour. I'm going to go ahead and shut it down from here. I do got to go out to the farm. I got to make videos. I got tons of stuff going on. So I got to go out to the farm because I brought my SD card home for the vlog, but I didn't bring anything else home. And I also got to go replace pads. So I'm going to go do that. And I got to pay rent. So I got to get all that stuff done today. Oh, I don't want to pay rent. Thanks for watching, everybody. Hit the like, comment, subscribe, and notification bell down below to be notified when we go live. And I will see you next Tuesday.